Hello everyone, I'd like to welcome you all to my channel, The Next Best Trader. My name is Lee, and I did set up this channel to try and help you out in terms of finding consistency in your trading journey. For we know that this is been described as the most difficult industry out there is for one to find themselves in. And we are not going to talk about the percentages, because I hope you are on the other side. And this channel was designed to help you become the next best trader, not in comparison to anyone, but in comparison to what you are today and what you were yesterday. By gleaning through the gems and the uh, informative knowledge and tips that are found on this channel, you will be able to find your way out, like to believe. As you can see from the charts, I have my chart open to Dow Jones Industrial Average Index, the US 30. And I would like to use this to discuss a topic that has been touched many a times, which every trader should be able to have some knowledge on: the higher time frame analysis. How does one properly approach their analysis of where price is likely to go and why? So that basically starts with your higher time frame analysis. So those are the two questions that every trader should ask themselves when they open the chart. Where is price likely to go to, and why? You have to have the reasons as to why you are leaning on that analysis or on that bias. So if this is your first time visiting this channel, you will do yourself a lot of good by subscribing and hitting the bell notification so that you don't miss out on any future uploads, because I'll be posting on a regular basis, sharing with traders what one can expect a particular asset to do, and maybe it is not that, just general knowledge about the industry for a trader to be aware of as they go about their daily business. If you have been here before, I thank you for coming back, and please may you share the word and spread it so that the channel can grow and we can be able to reach as many people. So that having been said, let us go to the chart. It is 24 November 2021. Time is 07:54 UCT -5. This is New York time. Local time, that would be about just about 3 in the afternoon, because I'm from South Africa. So higher time frame analysis, we'll be looking at the monthly chart, the daily chart, we'll be looking at the H1, and we'll also go down to as low as the 15-minute, in terms of searching for a setup, having convinced yourself that this is where price is likely to go to, and now you go for the why it goes there. When you have convinced yourself of that portion as well, then you can now go to look for your setup as to the best area where you can jump on and ride it to a particular level that you would have already marked on your chart. So let us go to the monthly to begin with. So yes, right, we are here on the monthly chart. As you can see, since March 2020, price has been in an uptrend. In fact, this month in November, price did set an all-time high right here. Price had not reached this level before, but it did hit that level as marked, and it rejected. So we are basically in an uptrend. But how does this help us? Because as we can see, this is a red candle. Price is dropping again. Forgive me, I'm being a bit reluctant to remove the markings on the chart now, because we're going to make reference to them shortly. the annotations. We're going to make reference to them shortly. But again, price is dropping. It made that all-time high and it's been dropping for most part of this month. So what do we know? What do we learn? How does that help us to derive directional bias? We will come back to this chart shortly and look deeper into it. Let's jump. I'm going to skip the weekly now. We're going to go to the daily chart. On the daily chart, we can see that after price made that high, it was made on the 8th of November. It hit that high and it rejected. It has been going down to this 24th of November. Price has been in a downtrend. So as a trader, you can look at this information and ask yourself these two questions. Let us say you were at this point. I'm going to mark it with a vertical. Let us say you were at this point and you want to find a trade. I know some of you would say, no, this is hindsight. You know now that price would be bearish because we can see that on the right. But let us say we had not come to this point. We were here, and this was the last candle to be printed, and you want to find a trade. How would you know? Not so simple, but it can be done. Let's go back again to the monthly chart and try and see if we can learn something from there. Here we are again on the monthly chart. We can see what price has been doing here. We closed the month of September with a bearish candle. Then come the month of October. It was bullish throughout all the way. So now, is November going to be bullish as well? If you see how it started, price started by going up and made that high, and now it's dropping. So when you see something like this, first, what's the trend here? We are in an uptrend, right? And we have a month that closed with a down candle here, and the next month was an up candle, confirming that the trend is still to the up. Immediately, as soon as this candle is finished printing, the month is through. We come back here and look at it. We look at this, we pay attention to this candle, and this is what my mentor, the inner circle trader, Michael Huddleston, calls a bullish order block on the higher time frame. Bullish order block. How does it apply, or how does one use it to try and find buyers in their trading? Bullish order block in the sense that price somewhere, somehow, is going to find its way back, even though it's going up, will likely find its way back either to the open or to the high of this candle. So what we do, we mark those 2 points, the open and the high. That's what I'm going to do now. We have marked the open and the high of this candle here. Let me just make sure that I've covered it completely. Okay, it's not printing out as well as I should. Let me just start afresh here. The open and the high, then extend it. That's right. So we are saying, even though we are in October here, in this candle, this is a monthly chart. And now we are in November. Are there any reasons for price to come down to this level here? This is a bullish order block. where price will likely come down to and launch again before it continues with its uptrend to wherever it wants to go to. So in the meantime, one can find trades to the downside. Is that possible? I'll show you how one can do that. Now, I'm not going to delete this rectangle that I've just made, but I will now skip the weekly and go to the monthly chart, to the daily chart, and try and see how this works out, or this would work out in one's trading. Because now we have said we have bias to the downside. Remember, we were up there, but when you look at where we have answered the first question, where is price likely to go to? We said to the downside. Why? Because we have a bullish order block down here that price would like to trade to, right? And another why, you look here, look at these daily candles. So for now, let me again remove this order block. Might put it back when we need it. I just want us to be able to see what is happening. Now we are on the daily chart. Price has been going up. A few days after that, it's been coming down. Then it made an attempt to go higher again. Here, if you look down here, we have equal lows, draw on liquidity. This is what ICT calls draw on liquidity. In what sense? Traders, when they usually see these levels, they place their stops down here, their sell stops, or their trailing stops. Maybe someone has been riding this. Now price is up there somewhere. They trail their stop down here. And also retail traders, when they look at this, you see price came down and it bounced. It came down the second time. It bounced. It went up. Now it's gonna come down. It should be able to bounce from there. So that is a draw on liquidity. Institutions use that to hunt or attack liquidity that is lying down there. So that is why if you look at my chart, keep this in mind. We'll make reference to it again. I've delineated this as sell side liquidity. I'm not putting it today or just now before I went to the chart with you. But like I said, we'll go to one or two videos where I made reference to these points here. So I'm going to remove that. I'm going to remove this also. Bear with me here. There's at the end of this, there's something that you're going to learn. I promise you. So now, after having deduced that price should likely go to the downside, what I normally operate with is the ICT OTE pattern. If you do not know that OTE pattern, I beg you and I urge you to visit the Inner Circle Trader YouTube channel, where you will find free lessons. He has got about 20 videos where he was teaching his OTE pattern. You can also be able to learn how you can put the levels on your fib, so that what you look at is exactly the same as what I'm looking at here using my fib. So I'm going to pull out my Fibonacci 2. This is the only occasion that I use an indicator. So I've pulled it from the high to the low. We have got a swing high and a swing low here. Price having come down to this level. So I'm going to extend it now. Let us extend our fib to the right. Okay. The top is not sitting exactly at all right, what level is this? We have the high 36,570. We should have our fib here also at 36,570, because that is the high. 36,570. That's right. So that's the swing high and the swing low down here, and I've extended it to the right. So when that happens, this is a swing. OTE pattern, optimal trade entry. You're looking for a trade setup here, an area where price it is at an optimal level for you to engage. So price came down and went back up. So I've got three levels here: the 0.62, 0.705, 0.79%. In these areas, I do take my trades. I can take trades at 62%. This is my favorite. But sometimes price goes deeper into 79%. You are not wrong. There's nothing wrong with that, because remember, when you take your trade, you are putting your stop just above the swing high here. So in any case, you are safe, and you ride it to the low. So now let us see what happened when price came down to this level. I'll zoom it so that we can see what we are making reference to here. I'll zoom it a little more. So look at this area here. Look at this, the high of this candle. Price came down. The high of this candle is actually at 36,329. And if you look at the fib, the 62% is 36,328. So just one pip did it go high by. So I will mark that for you to just see what I'm talking about here. Look at it here. This is where price came up to. And what happened as soon as price hit that level? It rejected. It rejected. It went down. And it closed lower. So for me, as an ICT student, using the other concepts that he has taught me, I see this as a leaning to the downside. Optimal trade entry, you go short here, you ride it to the low. But maybe let's say you're afraid to do that. You can wait for the next day, see if price drops. But I'm going to go to the chart, to a video, to show you what I was doing as price was on this day here, the 17th of November 2021. So we have said we have got bias to the downside. We have got draw on liquidity. We've got these equal lows here. When I look at this, I am saying the next target where price should be going to is this level down here. And this level falls also within or inside that order block. I'm going to put it back quickly. That order block I made reference to earlier. The order block, the high and the open, extend it. Now let us go back to the daily. Let us see how these things are coming together. You see, this level here is inside that order block where price is, we are saying, should be able to draw to. For now, don't look at what happened here. We're still up here. These candles haven't been printed yet. That is the approach we are taking, right? So again, I'm going to delete this, and I'm going to delete also my fib from here. Deleted my fib. And I now want to quickly introduce a portion of a video that I was watched that I recently posted on YouTube. If you have watched all the videos recently for the month of November, you will see that what happened. I made reference to the fact that price should likely attack these lows here. So I'm going to quickly pull up that video and see if we can all learn something from it. So I'm going to play this video from a point where I was making reference to what I was just showing you on the chat. We're going to go to the 13th minute or thereabout, so I believe. Let us watch from here what I was making reference to. As you can see, let me pause quickly. Let me backtrack a bit. I've paused. You can see this is the same chart, Dow Jones Industrial Average. You can see I've marked it here. Remember I said to you, watch this level, sell side liquidity, right? As it appears on the chart. In fact, we can briefly go back to the chart. It's 35,507. That was the level that I put on the chart way up there when price was still up here. Let's just quickly go back to the chart. Here is 35,507 sell side liquidity. And here, those equal lows mentioned here is sell side liquidity. So now let's go back to the video and let us just briefly watch what I was saying there in the text. You can see me typing there. As I was saying that on the daily chart, we had rejected the bearish order block. And I'm sure I'm going to put my fib here. And I mentioned the date. Yesterday on, was it the 16th of November 2021, making reference to this very candle here that had rejected here. This very candle. And price dropped lower. It came up here, it rejected. So as I'm saying this, we are on this current day, the 17th of November. As I said, I was going to lay my fib so that you can see what I was making reference to. And now, here comes the fib. I'm laying my fib there, from the high to the low. There are times where you have to use the bodies of the candle, but that is for another tutorial, for another lesson. Let's not get distracted. So here, there I'm marking that high where price came up and rejected. I'm marking it again. This was, you can see, as you can see, I was in a running trade here, having already taken profit somewhere. You can watch the rest of the video. I don't remember how it's titled, but it is a recent upload. I'm making reference to what happened here. And I'm making another note again. Exactly what I was saying in this a few moments earlier. The price came up to the 62% retracement and rejected. So overall, I am nailing my colors to the mast. Overall, we are bearish on Dow Jones. That is what I said on the 17th of November. While price was, I'm going to pause here. While price was still hovering at this level here, where in this candle, we are bearish. These candles had not been printed. Then again, I'm going to pull up another video and make reference to something as well. It's the same video, but somewhere again along the line, it is around the 31st minute. I made reference to something. Now let's watch again. You can see it is the same video that is playing itself out. I'm making reference to those equal lows down here. I'm making a note. I am playing this at normal speed so that we can all follow through. So I'm making a note. Having said that, we are overall bearish on the Dow Jones. Then remember that this is where that has answered the first question as to where price is likely to go to the downside. Now I'm answering the second part, why. As you can see, I'm saying there we have an area of interest further to the left in shaded area where price may revisit in the future. That's exactly what I said. Then I said this is for swing traders, of which I'm not. It was let it play a bit so that I want your eye to focus somewhere where I'm going to put that note. Down there. Down there. That is the point I was making reference to. That this is where price is likely to go down to. You can look, we are still up here. We have several days to go. I've already come to a directional bias as to where, and I've answered the questions as to why I feel price should be going down there. So now that with that in mind, then I go into the market to take trades. On a daily basis, I am bearish. Does it mean I'll get a bearish a selling opportunity every day? No. As you can see here, on this day and this day, we closed up positive. But does that distract one? Look at what happened here. Price shot up and it came all the way down. I probably may have taken a trade here. I may have taken another one here. Even though price closed up bullish, look what happened. Now, let us move on. Now, what did price do after having done that? Optimal trade entry to the downside to attack these lows resting here, this sell side liquidity resting below this point here. We came down, we attacked it, done, the business is done. That is perfect, guys. You cannot match that. So now let us look at before we go to a trade setup that was taken. You can watch all those videos. I think I will not put up a video clip of the trade setups that were taken, but maybe as I conclude, I should be able to give my directional bias for the coming month, for the coming week, or for the coming weeks. So let us do that now. Now that we have reached this level, how do we use this same knowledge we have used, or this same process, to try and figure a trade for the next week, for the coming month? Where is price likely to go to? Again, let's go back to the monthly chart. Remember, I am saying likely. I didn't say where price is going to go. Where is price likely to go to? That is called a bias. Now we're going to come down here. Remember, this was a bearish order block, a bullish order block, sorry. This is a bullish order block. We came down to it. And what happened at that bullish order block? I'm going again to put that rectangle. Price came down, seeking liquidity. Let me quickly put back that. Rectangle. Came down to seek liquidity. And immediately after that, rejected. Here we are bullish on this candle. Do I know what price is going to do right here? I do not. But where is my directional bias? If you were to ask me, we are still in an uptrend. We are still in an uptrend. Price is likely to go to the up. Why? We have draw on liquidity up here. Oh, delineate it. We've got the high here at this level. Price having rejected and come back up and rejected this level, we're likely to see price go even higher. Why am I so convinced? I'm not so convinced, but this is my directional bias. Where is price likely to go to, and why? Why the business down here is likely done. So that is why price should now be going up there, because already we are in an uptrend. I'm going to take another 2 or so minutes to conclude. So this is for you to study, guys. This is for you to study. See if what I'm saying does happen. It doesn't have to, but it's something that for you to consider. I'm going to go to an earlier price action, the monthly chart again. Why I am saying price should be going to the upside. Look up here. We are in an uptrend. Let me use, for those who like using trend lines, I'm not going to use trend lines. I'm just using this to show directional bias, right? We are in an uptrend right here. Price has been going up, price has been going up, price has been going up. Here, remember, we earlier on we used the concept of saying in an uptrend and the candle closes bearish, then wait for what happens to the next candle. It goes up, even though it did not close above the high of this one. But there is some things to learn from here. We expect the next candle, we are in a monthly, the next candle to come down, seek liquidity. We are in this range here. The high to the open, we extend it. I don't know why it's not exactly to the point. Right, we expect price to come down here. In this area here, this is where price should be roving around. So what I like to do, I'm going to remove this now. What I like to do is I put my my horizontal line on the open of the candle and wait for price to show its hand if it's likely going to come down to this level here. So this was in March 2021. So I'm going to use the daily to go to the daily and try and get to March 2021. Remember, we have marked our place. To not lose your place, guys. This is March 2021. This was the top of that candle, of that bearish candle here. So what happens on this day, the 4th of March, price comes down here. You could be a buyer right here and take it to the up. Unfortunately, let's go to the hour. Let us see if if I would have got an entry at a particular level using the same concept. Because on the 15th, I don't think my data will go that far. The price data will go that far. Look, it comes down, it rejects. From there, you see already what is likely to happen here. Directional bias to the upside, the business to the downside is done and dusted. It hunts the high, it keeps going, and that is where we are at the present moment. So going back to what I was saying, back on the monthly directional bias, we have our bullish order block here, this red candle. We have this green candle, that is confirmation that price still wants to go higher. Now we have what happens here. We have what happens here. Price hits this level and it rejects. It's beginning to go back up again. Is it going to close bullish? Likely, because there are still a few days and there's news that is going to be coming in the next week or so. So this may send price higher. So That is what I'll be looking for, guys. And that is how I'll approach my higher time frame analysis. And I've shown you how I managed to took trades using that very same approach. So I do not want to make this video longer. I know I've left you with many questions as to why not this, why that, and how can you do this, and how can you do that. If you're watching this video, you can also just send through your comments with your questions down below, and I'll be able to get back to all of you. This is a very small channel at the present moment, so you are privileged to be having my one-on-one attention. So if you send through your questions, and I'll be able to get back to you, maybe give you other information also on a day-to-day basis as to what will be going on and how we can engage price. Because remember, to conclude, as I said, when you look at the charts, there are two questions that you need to ask yourself. Where is price likely to go to? And why? The why is the where is the bias. The why. Look for draw on liquidity, areas of interest, equal lows, the sell stops that may be lying in an area, fair value gaps, of which we are not going to talk about in this video. That is for another day in time. And remember also to engage price at the right time. It is not price and time. You engage price at the right time. So it's time and price. With that, I'll talk to you later. May you have a blessed one, and may you continue to grow and increase in your knowledge. Trade carefully, guys. Ciao.